Okay, YouTube, good morning. Today I have another quick, great call with Mr. Palsen, Mr. Peter Palsen, one of my favorite correspondents that I work with. He's a colleague of mine. He works for the Frost Tax Law. It's just another tax firm. They're a little bigger firm and they do more controversy. They have a bunch of lawyers. They do a lot more stuff than I do. But Mr. Peters generously has his time here. He has some questions. We're talking about a hotel in Costa Rica and a lot on the Corporate Transparency Act and the FinCEN filing and information sharing. It's a really insightful video. It's not super long. I recommend you watch it, and I'll see you soon. Let me know if you have questions. Like, subscribe. Let's get to it.
So thanks for talking to me, Jim. I appreciate it.
No, thanks for being here, Peter. Good morning and everything. I'm really excited to get into our talk today. So yeah, let me know. Let's get to it. Yeah.
Well, I've got a client, Jim, that is in the hospitality business in Latin America, a number of countries where they have resort properties, and they tend to cater to a lot of U.S. people. They market into the U.S. And they take deposits. You know, they require, as you can imagine, a deposit if you want to book a stay, and then in some cases there's a balance due or something that's not paid at the resort when they check out, and that's going to be billed to the client. And they're looking for a way to accept payments from U.S. customers through like ACH transfers or some payment gateway in the U.S., something expedient so that clients won't have to, figure out how to get money to them, via credit card, which can be very expensive, or in, certain currencies that they're not used to dealing with. So that's really the objective. And I had several questions about that. And then the number one is it possible for, let's just say that there's an entity in Costa Rica that owns a resort property. Is it possible for that entity to open up a U.S. bank account?
Well, it's not possible really for the Costa Rican entity, but they could open a subsidiary LLC and then open a bank account with that and use that for operations. And that's what I've done for many clients in the past. It depends on the scale, how they accept the payments, because I mean, if you want to have an executive come to Miami and of the company or the bank, come to Miami, whoever owns the top level company, so they can come and open the U.S. bank account, and then if they have a Chase or Bank of America, then they can accept Zelle, which is really popular in Latin America too, and there's no fees on that. I know it's not intended to use for business, but like for example in Venezuela, everyone uses it for all their businesses. It's really crazy. So, with that, you can accept Zelle, U.S. wires, U.S. ACH bank transfers, which are a little less popular, a little more complicated. But you'll have access to all the platforms in the U.S. too for accepting payments, which would be whatever payment processor. PayPal is very popular. And the more ways you have to get paid, the easier it is to get paid and the faster you get paid. And a lot of like PayPal and Stripe, for example, have really good integration. So if I'm on my phone, I just click a couple things and I'm paid already. Especially with PayPal, it's really, really easy. It's not the friendliest payment processor for people who are selling stuff, but it's friendly in terms of it's easy for people to buy.
Well, that sounds like you just kind of went right to the end with the solution, which is really incredible to understand that something like that's possible. Now, you mentioned that some executive or somebody associated with the company should open up the U.S. bank account. Why wouldn't like the Costa Rica company just open up the bank? I mean, I know it can't open it up directly, that banks in the U.S. don't want to open accounts for foreign entities, but could the Costa Rica company that owns the resort form a U.S. LLC, and then that U.S. LLC would open the bank account? Is that a way to go, or is it better, and why is it better to have some individual open or set up the LLC and open the bank account versus the entity itself?
Well, that's a great comment there. That depends a lot on how they're managing their local tax. It really depends on if they want the profits to be like allocated to the company, or if they want it to be to the individual, or how they want to show it. And again, it really is more impacted by the local tax laws and how they're set up there. Because maybe if you want to be way more aggressive in your local tax jurisdiction, you want to use someone who's not in Costa Rica or not a resident, not paying taxes there, or someone who lives in Panama or something like that, and set it up like that, which is, it's obviously more aggressive because you're getting paid for services being delivered in Costa Rica. But again, the Costa Rican tax system in this example, and I guess in all examples, is very, it seems to be all over the place. They don't really, it's really, they require a lot of reporting, and I don't know how they're checking on anything, but to that regard, it depends really on how you want to do it, but it can be done either way. Whoever owns the LLC, the ultimate owner, a person needs to go to the bank. So if the Costa Rican company owns the LLC, you still need to have the owner of the Costa Rican company is who you kind of say owns the LLC with the bank, because that's kind of, the bank needs to know a natural person.
Now, does that typically involve the person coming to the U.S. and dealing with the bank?
Well, there's online banks that we use a lot. I mentioned that specifically for like a really active business that wants more methods of payment. Bank of America and Chase and Citibank and the bigger banks will open accounts for non-resident for these situations. In Miami, especially, you might have to go to like 4 different branches. And if you go to like Ohio, you're going to have to go to 5 different branches, and they might say no. But in Miami, I know it can be done at the same banks, and you want that for Zelle and for different kinds of international wires. So another good example is, I know it's not this example, but there's a lot of people selling courses on Hotmart, which is like, it's a platform. I think it's a Brazil-based platform, but it's just hard to send wires in the online banks because they're correspondent banks. So if you're getting international wires coming to your U.S. account, it's easier with a bigger bank because they're direct receivers and processors of international wires. That's the only caveat. Otherwise, the online banks are amazing. I use online banks myself personally, and you don't need to come to the U.S. to open an online account.
Well, what's an example of an online bank that you work with?
I like Mercury Bank a lot. It's they have free wires. It's free accounts, multiple debit cards. I use it for my businesses personally. I never have to go to the bank, which I hate going to the bank, making appointments, talking to people who don't know what they're talking about. And then it's just like annoying for me. I do have some accounts in case I need them, but generally I don't use them that much. And, but if you're receiving Zelles or international wires a lot, then yeah, it's more helpful to have a bigger physical bank.
So circling back, it's hard if it's this Costa Rica company, it might be hard to set up a U.S. bank account. If you're an individual who's a resident of Costa Rica and not a tax resident of the U.S., you can open a bank account, maybe an online bank account. If it's a U.S. bank account, dollar account that's going to be able to take ACH transfers and work with payment gateways like Zelle, do you still need the LLC, the U.S. LLC? Is that still the best practice?
I think it's the best practice for a number of reasons. The LLC, first, you can't open an online account without traveling to the U.S. without the LLC. You can't open a personal account like that. And when you come to the bank to open an account like a big bank, like a physical bank like Chase account, you need to have certain documents like a proof of address in the U.S. and different things that we'd have to set up for you and like arrange so that you can do that. So it's not like you can just walk in there with your passport and they open an account. You need certain documents. You need to be prepared, whether you're an individual or with a company. But in general, apart from it being a little easier to open accounts with a company, you have like the legal liability protection. You have an entity, you have something you could sell, something you can transfer. There's more. It's not just like your personal account where you're at risk personally. It's a level of separation, and the cost to open and maintain it, depending on the scale of your business, is not very much, and it's very fixed, and it's can be used for different things. It's just a tool that you'll have.
And you mentioned that an LLC can give you a level of protection in a sense overseas if you're considering your tax or legal exposures overseas. There might be some benefits in having an LLC. You and I have discussed really quite a bit off camera over the last period of time, this new beneficial ownership disclosure rule.
Yeah.
And the government, it's a Treasury FinCEN thing, just issued an advance notice of proposed rulemaking toward the end of last year, which talked about the need to register, in a sense, LLCs are obviously already registered in formation, but to register the beneficial ownership, to disclose the beneficial ownership, and that banks will have access in some form or fashion to that information. Do you think there's a potential grinding of gears going to be going on here with respect to LLCs and this new reporting requirement and the kind of disclosures made to open bank accounts?
I'm really interested to see how it pans out. You've read a lot more of the proposed legislation than me. I'm more of like I'm a little pragmatic. I'm going to wait until they give us like a portal to do the forms, because that's what I'm really like. How am I going to do this? Because I understand the base principles are, if you any 25% foreign-owned company, whatever kind of company, have to disclose who the owners are to FinCEN. That's basically it, right?
Yeah, and they talk about how, in a sense, easy that's going to be. I think they anticipated, potentially tens of millions of potential respondents. I think at one point in time, the government said there are 2 million LLCs set up every year. And they said the average cost of compliance is going to be, $200 or less to do this. So it sounds like a very routine, uninteresting, pedestrian type of activity. But you kind of wonder when they collect all this information and they start, in a sense, using it, where this is all going to go and whether this is going to become problematic with respect to representations you make to the bank. Because let's just say you set up this LLC and it's got a U.S. bank account, you're going to have to submit a tax form to the bank. Is that correct? And that could be a W-8, that could be a W-9, depending on the status of this LLC.
It's interesting. The bank kind of makes their own assumptions on that. They don't affirmatively ask for it all the time. At least the online banks don't. I don't think you have to actually fill out a W-9 and submit it for a Mercury Bank, at least. And other banks kind of might make their own assertions. But yeah, I mean, that's even like a company could have a W-9 and still be foreign owned. A foreign owned corp would still comply with FinCEN, but also give a W-9. So I don't know if the W-8, W-9 matters as much as who they report as the owner of the company, because they have that listed on the bank accounts, especially on all the banks. And if they have a way to cross-check that, then yeah, sure. If people are having other people open accounts for them incorrectly, then they'll get closed. I mean, it's generally hard to open accounts. And when that's done, for example, if I open an account for you when you're out of seas, I would be the manager and I'd still report you as the owner if we do it correctly. And in that instance, I think it should still be okay. But to go back, it could present problems. I'm interested to see how it's implemented, because we're talking about FinCEN instead of the IRS. FinCEN is way more, in my opinion, probably more organized and pointed than the IRS, because we've been sending 5472s and they're just sitting in a pile in a warehouse. And like this forms, if they're going through an electronic system, will be able to be sent out. Like the 5472s have more information on them, but they're also like, I don't think they're even processed or put anywhere, because I've never received any kind of correspondence about one of those at all. So it's really interesting to see how they'll do it. And I just think FinCEN will have more of an impact, but I think that a lot of people are doing it right, but if people aren't doing it right, they're going to have problems. And I'm interested to see where the problems come up, because there has to be some kind of use case for this.
Well, and I think take the example of an LLC. You mentioned W-9s, but I believe that if you are a sole owner and you're a foreign person, you're a non-U.S. person as sole owner of an LLC, and the LLC is required to submit one of these forms, you're really supposed to submit a W-8, because the U.S. Entity is disregarded for purposes of these withholding tax rules. But if it's a partnership and you have two owners, then you submit a W-9, because it has some personality. It has personality, and then the partnership is supposed to then get W-8s from its owners or W-9s from its owners, tiers it up. So if you have, not you, Jim, but if someone has represented to a bank that they are a sole owner of this LLC, and they've submitted a form, whatever the form is, I suppose W-8 or W-9, and then it turns out when they do their beneficial ownership disclosure, it's really a partnership owned by two foreign partners, and there should be a W-9. I think at that point in time, we have this additional level of analysis that might occur.
That happens. That actually, that's a great example. That does happen a lot. Like one partner can't come, and the banks are really annoying. They won't open a partnership account with only one partner here. So sometimes they represent it like they're the only owner, and since it's not really visible anywhere, that's definitely an example of accounts that could get closed.
Yeah. And then just generally from a U.S. tax standpoint, I think that it's fairly settled area. This isn't tax advice, but it's fairly settled that a U.S. bank account by itself or a U.S. LLC by itself is not going to create a U.S. trade or business or effectively connected income. You've got to kind of look more at what activity, for example, in this case, a resort, if they're coming to the U.S. and promoting the resort, having, like showing up at the Holiday Inn and doing pitches or whatever it is, and there could be some creep into U.S. trade or business status, but unlikely that a bank account by itself is going to cross that threshold. That sounds good, Jim. I think in closing, it sounds encouraging.
I have one question for you actually about this before we sign off. What do you think are the implications with this information being shared with other countries and other governments, the FinCEN information? How is that going to be sent to Costa Rica, for example? Is anything in the guidance there?
Well, I know that I was on a webcast the other day, or a webinar, and the IRS was on there, and they were talking about how they're putting more emphasis into information sharing with, in particular, treaty partners. And I know there are not treaties with a lot of the Latin American countries, but I do think that there still may be some, channels. For example, there's no treaty between the U.S. and Puerto Rico, but they figured out information sharing. So I do think that's something that they're in effect encouraged by is the value of some of that information exchange and the efficiency of it, because they only have so many people, to be able to deal with this. So if they can somehow start just doing matching and artificial intelligence and surface bad actors in that fashion, that's
a massive pool of information. AI is gonna. That's the first time I've heard it like that. But AI is definitely would play a huge role in this. But yeah, you're right. There's not enough people, and there's a lot of information. And I mean, it's not for this conversation, but FATCA versus CRS. We have our own different systems of international information sharing. So it's a lot of good stuff. Well, that's another conversation, I think.
We will pick up on that later, Jim.
Okay. Well, yeah. I mean, I think this is a great conversation. Thanks for taking time out to talk about this. And I guess if we're wherever we're posting this, if anyone has questions, you can contact Peter or I with information in the description, and comment your questions below, and we will be in touch with more videos as there is actual guidance. And good luck to your clients in Costa Rica. I think they should open an LLC in the U.S. account. That's going to be the easy answer for them.
Okay, if you set it up, we'll give you a nice little resort for a week, Jim, in Costa Rica, Guanacaste.
I love Guanacaste. It's the best part. I stayed in there I was in Guanacaste for 3 months in 2012.
Fantastic. That's a nice pitch.
Yeah, it's good. I know the place. Pura Vida. Los Ticos. Yeah.
All right. Bueno.
Okay, see you, Peter.
Bye-bye.